Good afternoon. Today is Friday, the 15th of April, 2011. Let's take a look at this market here. Where are we? Here we go. So the S&P 500 today finished with a 48-cent gain and just below or right at that 20 and 50-day moving average. When we look at the intraday time frame on the 30-minute time frame is what we've been looking at. Or actually, I'm sorry, yeah, it is the 30-minute time frame we've been looking at. Let me just tighten this up a little bit so it's easier to see. The S&P 500, for the week was down. I think it was kind of a goofy week the way the market traded. We had obviously we were down, but that wasn't a surprise because we saw this range break, the 133 to 134 range after that uptrend. We broke support, we made some lower highs and lower lows, and then we gapped lower here. And on Wednesday, or Thursday morning rather, what I'd said on alphatrends.net was, when the market's down 5%, is that when the smart money sells on a gap lower? And what I was looking for was a reversal. I wasn't looking for a huge uptrend, and I expressed caution because of the declining 5-day moving average. But let's take a look at that 10-minute time frame. We can see here that the level that had been resisted, prior support, we got up to that level here this afternoon. Didn't quite close that gap fully, but we do have that 5-day moving average declining, and I think that we're starting to show some stabilization, as I said in a blog post this afternoon. So the market is stabilizing here, and it's when we look at it on that 30-minute time frame, we can see that kind of crossing back and forth above and below that 5-day moving average might be what comes next for it before we make an assault on that 133 level. That 133 level is something that is probably going to be near-term resistance next week, but for now it looks like something that the buyers are starting to gain a little bit of control. And the reason I say it kind of traded goofy this week is because when you have a market leader that everyone's in love with, like Google, you see that thing fall apart on earnings, and it broke down through what had been this prior support here near about 550. We broke that prior support level and continued to drop down below that. If you look at the weekly chart of Google, it looks like it's probably headed for about 500 a share or so before it begins to stabilize a little bit. And that's probably what it will need, is some stabilization down there. There's no reason to be early in buying these market leaders when they break down. Let them break down, let them bleed out, let it kind of recapture the 50-day moving average. That's the 10-week moving average that we see after the last couple pullbacks. Once it recaptures the 50-day moving average, and then you make a higher low, then you can consider it for some longer term positioning. But right now isn't the time to be buying a stock like Google, I don't think. So the S&P 500, we're still in a weekly uptrend, and we really have to look at this more as a consolidation in that uptrend. If we take a look at the 30-minute, or I'm sorry, the daily time frame here, this is something we've been talking about for the last week or so, is the possibility of an inverted head and shoulders pattern forming. I think that was last week I started talking about that, and we can see that we do have this this right shoulder, which seems to have been formed right now, and we've got this what would be the neckline right up there at about 134-ish area. So if we can kind of rebuild and make a nice pattern of higher highs and higher lows to get back up to that 134 level, it brings the possibility about of a bigger move higher that would show, then we'd have to look to the weekly time frame to consider where the potential upside would go. And I said it was kind of a goofy market this week because we had Google breakdown, we have Apple showing weakness, and we've got a pattern in Apple of lower highs and lower lows. That is, what we can see here on the daily time frame. We've come down to this bigger support level that still isn't quite broken near that 325 level. But if it does, I mean, it wouldn't be a horrible thing for Apple to come down to its 200-day moving average. But we have, these two big stocks breaking down, but at the same time, we have stocks like CMG that are breaking out to all-time highs. We have a stock like ISRG that's looking like it's ready to break out to an all-time high here as well. And we have stocks like DEC that are at an all-time high. So there's a lot of good momentum still in a lot of these leadership stocks, and it seems to be that they're just kind of taking turns, which is a good, healthy sign for the market. Here's a stock that looks like it should be able to continue to move higher, which is Mercado Libre, which is basically, I guess, the eBay of Latin America. So the eBay of Latin America is consolidating here above this rising 10-day moving average, and we've got a rising 10, 20, 50, 100-day moving average. You look at this longer term chart, and it's showing that it's got still good potential for momentum continuation. And this is where the shorts are getting buried in these types of stocks. Even a stock like Priceline, which is up at 520 bucks a share. It's not an all-time high here, but on that weekly chart, it's got great momentum. The daily time frame, we can see we've had a nice tight consolidation in here just recently, and where there's momentum, to try to pick the tops is really a fool's game. A lot of people tried to pick a top in silver because of this heavy volume that they were talking about, and on Wednesday I said don't look at this as a top, because what we had seen in silver was that we had pointed out these higher lows above that rising 5-day moving average, and then we broke that resistance at the 41 level with a gap yesterday, and that's where we had the buyers come back in and really take back the control of this market. So again, we've got kind of a mixed market here when you look at the action of the some of the leading stocks, and it's been a choppy market environment really here for the last 6 weeks or so after this breakdown, this break, which was that the Libya? I can't even keep track, or that was probably Japan, the earthquake, I think. I'm not really quite sure. I forgot what the labels were. This was like Egypt, and then that was another Middle Eastern country, and then we had Libya maybe, and then the Japan. Actually, Japan, the market rallied after that. But after testing a technically significant level, which is, of course, that rising 100-day moving average. Back to the NASDAQ for a minute. The NASDAQ's really been just kind of quiet in here. It's basically it's building energy for something. What that something is, it could be an upside move. We've got kind of what looks like a neckline here on that daily time frame. If we take a look at the weekly chart of the NASDAQ, it's just consolidating here. There's no real signs of topping or anything like that. We've got this market that, in particular, well, near term, 57 has been the level, and we've been battling this declining 5-day moving average, and closed pretty much right on it today. So, we were looking at some technically significant levels this week based on the volume-weighted average price since the since these March lows, and we briefly undercut that in the NASDAQ, but came back up above it, obviously, as we can see here. And now, I just lost my trend tool. By the way, one of the most frequent questions that I receive is, what trading software do I use? And it's here on the screen, this is Realtic trading platform. It's for charts and for analysis as well. So We've got the the NASDAQ that's kind of battling this 5-day moving average. We held that volume weighted average price for a couple days now, and if it can transition next week back above $57 a share, that's clearly what was the prior support level in here that has turned into resistance this week. So this, we got above that 5-day moving average, and we did so without Google, and we did so without Apple. To me, that's pretty impressive, because those are the ones that people equate with the NASDAQ, and rightfully so. I don't know when the date is, but you have to believe that excuse me, that a lot of this weakness in Apple is because the rebalancing of the NASDAQ 100, that they're taking it from 20+% down to a 12% or so weighting. That is Apple, and the people, every NASDAQ 100 fund, or fund that has to kind of, their benchmark is the is NASDAQ, really has to kind of reweight their holdings in the in Apple, and raise money selling Apple. So it really shouldn't be a surprise. It's not a negative thing necessarily about the company or their products, obviously, but anyways, I don't know when that's happening, but it's, until that's out of the way, there seems like there's just going to be an overhanging offer on the on Apple, that is. So, but maybe they're taking that money out of Apple and putting it into other NASDAQ 100 companies that are getting that rating. So that's not a game that I play, but it seems as though that's maybe what's happening, because the NASDAQ is not declining. However, we are stuck below all week, below this 50-day moving average. We're getting that 50-day moving average kind of flattened out. So, 57 is the level next week, that if we can get back above that resistance, I think that's what could lead to, the next little short squeeze higher. However, breaking down below about 56 and a quarter or so, 56, let's just call it, then we could see further weakness here in this NASDAQ that maybe leads us to a test somewhere in this area near 55, even 54 looks pretty good. It actually wasn't a clip-on, but thanks. The NASDAQ, so the Russell 2000 was the one that I was, they kind of led us lower. It got down to the 50-day moving average, and if I wanted to name a pattern after myself, I would call it the 50-50 VWAP, meaning what we were talking about was the support that, or the potential for support, and a lot of people saw the potential for support, obviously, at the rising 50-day moving average. It touched it on Wednesday, cut down a little bit deeper, and stopped people out on Thursday, and that's where we had seen, not only that, but a 50% retracement, and that's these levels I have on here. The market pulled back 50% of this prior up move, and this green line is the volume weighted average price since this March low. So the market here, we pulled back to a 50%, we pulled back to the 50-day moving average, and it did do what I was expecting it to do yesterday. Unfortunately, I didn't hold my position. I had gotten involved, actually right here, got a little excited on the IWM, got out with a couple pennies profit there, basically break even, but then got back in with some conviction right as it crossed back above the volume weighted average price yesterday. And you can see since that gap lower, this market has been really the stronger market. It's back above that 5-day moving average. Next week I would think that maybe, hopefully, we could see a pullback down to the 83 level that would give us the ability to maybe make some low risk purchases in the Russell 2000. So maybe a pullback towards the 5-day moving average, 82.75-ish, and then we create a higher low and are able to go higher. And this is the potential for bullishness in this market, that we look at the Russell 2000 kind of led us to the upside over here, came within, or actually did make an all-time high this month, and maybe it's not done going up here. So this is still, I think, the most interesting market near term, and where the bigger volatility and actually the cleaner trades are coming out of the Russell 2000. You can see where it broke this resistance here today that kind of lined right up with that 5-day moving average. So there's still, again, a kind of mixed picture here in these markets that, you know, if we lose that 56 level in the NASDAQ 100, maybe we just need some more time to consolidate the, you know, this bigger gain that we had seen here. Or are we going to see a move similar to you know, what we had seen early of 2010? We'd seen that bleed off and then another push higher. Maybe we're going to be more like this. Nobody has a crystal ball. That's why our job is to identify low risk setups and then manage risk. You never have full comfort level on a trade, and that's something that I had, I think it was Futures Trader 71 who had posted a link to someone's blog. I tweeted it yesterday. I watched it and forgot what it was, but there was a success story of Evan Longoria, who his psychological coach basically kind of told him that what you want to do is be comfortable or get comfortable being uncomfortable, and that's the way it is trading. A lot of times you never have that certainty. If you think you have the certainty in a trade, it's usually going to be something that goes right against you. But you know, there's that again. We have to say, where do the odds favor a low risk trade? Is that in the semiconductors right now? I don't think the semiconductors are the place to be. We've got all this choppiness, these gaps, and you know, just choppy action back and forth. We've seen it trap below that 50-day moving average, and if we lose this level next week at about 33.5, that's likely what would drag that NASDAQ 100 lower as well. And then we'd have to think that maybe this market needs a little bit further you know, consolidation through time, if not a deeper price correction. So we're at a little bit of a crossroads here in the semiconductors, and that spills over obviously to the NASDAQ 100. The financials this week, we'd seen people getting excited about it, you know, back above the 50-day moving average last week, but that, you know, so-called breakout failed. We still have an indecisive market here with these moving averages crossing back and forth. What happened this week was you know, the big event was on Wednesday, which was JP Morgan had announced earnings, and people got excited because JP Morgan was gapping up. The financials gapped right up to the penny almost to that declining 5-day moving average. They sold off on Wednesday, further weakness yesterday. Now they're trying to stabilize, but there's no sign in here that this market has stabilized or that it is ready to move higher. So, you know, we would need at least a move back above 1625-ish, I think, before it's showing better signs of stabilization. But you know, the daily chart, we're right at that 100-day moving average, and you know, you can look at it as maybe just more of a range-bound type market in here. You know, to me, the financials don't offer an edge. Neither does the you know, the semiconductors. So I'm going to try to stay away from those. And obviously we have earnings. The earnings are going to really start flowing, I believe, this coming week. That is next week. We'd seen some of that this week. Obviously Google was you know, last night, and that's going to be the case. That you know, all stocks, you've got to be even more mindful about when your earnings dates are due for the companies that you're following. Something that was strong yesterday that people were talking about was the IYR, and it had some further upside today. This market really, I mean, you know, 60, 50, what is it, about 57 to 60, not really too exciting, but still, you know, looking strong and looking healthy. Some of the stocks that I spoke about on Wednesday included this EXAS, and you know, all the biotechs have been strong, but this was a nice low risk setup. Got some nice follow through in there today on a 10-minute time frame. Just real nice steady move higher today. I'd say probably a stop at 745, 750 if you got long that one recently. We also spoke about this little one, INHX. that wasn't giving us a reason to buy yet, but it was something to watch. Well, it started to stabilize in here a little bit today, and I think that probably next week above 420, that would be the level to get above that maybe some momentum could come back into this name. Of course, you'd want to put your stop probably below this this pullback low, so down near about 395 or so. You can see that it's fighting that 5-day moving average, but not quite ready to buy yet. It may fail at that 5-day moving average, so I wouldn't be involved yet. PPDI is a biotech also, and this one, we were talking about this nice triangle in here, that the weekly chart, it was a real, it's been a nice breakout on the weekly chart and looks like it still has room to run. I think this is a great setup still. It's still got this, we had that big volume on the upside followed by lighter volume consolidation. It kind of got stuck. Yesterday I told subscribers, keep it on your watch list still, that it probably needs to clear that 31 and a dime. It did do that and really didn't do much, so I still think it's in a good buyable place here. Of course, you have to be aware of what their science is, what their what they have going on, but it does look like a good, a worst case stop, probably down near about $30.45. We also spoke about REDF, which made a real nice move yesterday. And this is one of those really choppy Indian stocks that unfortunately you can't trade it with size unless you're willing to take a lot of risk. But it did have nice follow through on the upside, and that was a good trade yesterday. I had sold out of my remaining balance, I think, on this bar yesterday. But nice little consolidation in here at the end of the day. It never got going. It still looks like, the weekly chart, it still could continue to move higher here, so it's worth keeping an eye on. We spoke about Under Armour, and Under Armour, that 75, it couldn't hold above. It got above on Wednesday afternoon and then kind of fell back down, but it's got the rising 5-day moving average. I'd say next week, if it can get above this week's high, so whatever this level was, 75.10 maybe area, that would be a good one to continue to keep an eye on. And VeriSign, kind of, it gapped down on Thursday. We were looking at this as a pullback and then rally potential. It didn't do that. So when they gap down like that, you don't want to chase them. Let them stabilize, let them settle in. It hasn't settled in. It's got lower highs and lower lows, but the daily chart really looking like a nice little consolidation here, up at highs that haven't been seen for a couple of years. So VeriSign, I'd say keep that one still on your radar. DEC had a great little move in here today that we caught in the chat room. VRTX is another biotech that is kind of consolidating with this little triangle type pattern, actually a bigger triangle pattern. And Vertex, if you look at longer term time frame, it had broken this resistance. These are what highs actually, for the last 10-year high, but it's been an area of resistance since 2006, so about a 5-year level of resistance. Anyways, I was going to say, what was it? I forgot the date. I saw it because I posted something on a Zipcar. But this past, about 2 weeks ago, Alpha Trends turned 5 years old. Alpha Trends, it was Blogspot back then when I started, but Alpha Trends Net. Anyways, SMOD looks like maybe a good opportunity for next week. This one trades some pretty good little volume, so I'd keep an eye on that. Got a couple requests here. Let's take a look at Safeway. The grocers. I think it was Chess and Wine that I'd seen. Did a post on that. Safeway looks like it should be able to continue higher. Look at where we are and where we have the potential to go. Maybe up towards $27 a share. So the grocers have been strong, and let's take a look. Cerner as well. Cerner, Johnny Utah wants me to take a look at that. And Cerner's, nice consolidate. It touched on this 20-day moving average on Tuesday. It began to stabilize. It got back above this 5-day moving average. The 5-day moving average is now flattened out. I think that you break these highs. Well, I didn't draw that very well, but you break the highs of this week. With a stop down near about this 110 area, that you're probably going to see at least a return to these highs highs up near 116. So maybe 4 points of upside as a minimum, but we've got it at all-time highs, so it's really tough to say. If it's a true uptrend, it's not going to tie this high, but it's going to make a higher high. It makes higher highs and higher lows. So Cerner's looking like a good chart here. So anyways, that's going to do it. Thank you for tuning in. I appreciate it. Hope everyone had a good week of trading, and we'll talk again next Wednesday. Take care.